Everybody start off with. Shall we start with the Trump thing? Just, it's just slightly relevant today. Can I perhaps ask then, panel twos, any opinions on what today's decision, what has happened in the States today, might mean for the investment community in general, SRI community in particular?
Shall I go first? I mean, I think the most relevant thing to our world of sustainable investing is Trump's anti comments on climate change, and he wants to annul the Paris Agreement. That's what he said. And the obvious debate, like all this stuff, is do his words mean anything, and will he be able to make a change when so many countries have committed to it already? I think 93 countries at the last count. Will Trump be able to sort of pull back all of that positive momentum behind this? And he's also said a lot about promoting investment in coal and gas at the expense of renewable energy. So potentially he's very dangerous. But I think the big thing from the election last night was also that the Congress and the House went Republican as well. So although that means he might be able to get some policies through, I guess we're waiting to see whether the other Republican members of the party stop him enacting his most crazy things. Interesting, the stock market action today, from what I've called back to the office, is that it opened up pretty sharply down, but actually now it's back to being flat, and most stocks are pretty calm. So the market's been fairly reasonable in thinking that lots of noise, but on the ground we just don't know how much of this is going to come through. So I think the reaction's been fairly muted so far.
Yeah, I echo that. I guess I think it's going to be quite difficult to dismantle a lot of the climate change negotiations that have gone on. It's interesting that China have only said two things in this election build-up, and both of them have been to do with climate change, essentially saying if you try and derail this, there will be very negative consequences. And I suppose the bit that I'm most worried about is that as a result of that, the advent of trade wars and anti-competitive stuff going on. So that's a worry that suddenly they're going to be import tariffs left, right, and centre. But I guess as with a lot of these things, it's going to take a matter of months, if not years, before any of that starts happening. But obviously not massively positive for renewables. I guess we've been here before though, because the US until recently has never really been a massive climate change believer. And what we saw there was that a lot of while it wasn't at the federal level, but a lot of the state level, there was huge amounts of regulation happening and lots of renewables getting installed. So it's not ideal, but it's not necessarily the end of the world, I hope.
Can I stop 2 seconds just saying, Naomi, I had intended for you to be on the panel, I apologise. I asked for a fund manager slot. Would you like to join us at the front? Sorry, organised chaos here. Be careful to table if you don't just come in. So, would you like to take the Rathbones?
Yeah, sure. I mean, not much to add. There's still quite a lot of uncertainty. It's going to depend on how many Republicans are following Trump. And we just have to wait and see how that settles. But obviously, very positive for fossil fuel companies, gas, and potentially coal as well, which is not great for SRI fund because we've been fighting for so long to show that we can outperform. So that's going to be a bit of a headwind, I guess, in investors' mind as well.
Isn't the question more about, I mean, Trump is obviously trying to appeal to the blue-collar vote, and I would have thought that the challenge is if renewables become commercially more viable and states recognise that, then that's, to me, that's the issue, isn't it? I mean, Trump is just a populist as far as I can see. He just says what pleases people. So, I mean, it seems to be his core vote area. So I would have thought that's the challenge.
And I agree, but then if it's import tariff on solar panel, that's going to be...
No, I agree, but
Yeah.
So, Julian, for a financial advisor's view?
Well, let me try and turn around and give you what I think is a client perspective, because our clients exclusively select on the basis they want ethical, socially responsible, sustainable investment advice. So, and like Julia says, from the interpretation that they come in different hues and different interpretations. But fundamentally they get this, so actually Trump's election makes no difference to actually what clients are looking for. They're looking to the markets to be a conduit to deliver something. In fact, the growth in localism and developing of small-scale renewables, etc., is partly driven by the fact that there's a groundswell of people out there who want to make things change, and they actually get quite frustrated by the fact that big capital doesn't necessarily find a way into it because it hasn't been at the right profit point. So from an environmental perspective, I don't see that as a change, and I think those drivers are there. Now that might have short-term implications in terms of markets and profitability of certain approaches, but those aspects and the social aspects which apply as well, so the things around modern slavery, migration, etc., all still apply as well. That clients are interested in how businesses are run and what policies they put into place to actually adhere to good labour standards both in the UK and internationally.
Yeah, sure. I mean, I guess without repeating what's already been said, looking at the initial impact on our fund, you know, we are very UK-centric, around 2/3 of underlying revenue from the UK, around 10% US, so our direct exposure to the US is fairly limited. And also as part of our kind of ongoing screening process as well, you know, we do take out some of the sectors which will be impacted in a larger way, either way in terms of performance, so the resources and the pharma and the biotech do drop out. So yeah, I think that's kind of where we're positioned at the moment, so we've been comfortable with that.
MSCI comment? I know you're so good.
Trying to think of something that hasn't already been said, and I mean, I guess maybe on a bigger picture, kind of what does this selection say for values, and which values matter, and how people do business, and from a very personal position where I sit and I look at, I think, the impact on women and diversity, and you know, one interesting study MSCI did was around the role of board diversity, which shows that organizations that have stronger female leadership have fewer environmental, social governance controversies, fewer controversies around corruption and fraud, and have stronger financial performance. His win does not send a very strong signal that women should be leading organizations. And yeah, I just wondered more broadly in terms of corporate behavior and whatnot. So I was just trying to add a slightly different angle, but I really agree with what the others have said.
Can I open it more? Yeah, please.
Well,
Would you like to say who you are first?
Sorry, I'm Paul Schwer from Paul Schwer Financial Services. While we're sort of on the sort of political side, looking further forward, this sort of lurch to the right that we're seeing from the Brexit vote, from Trump's election, from the rise in France of Marine Le Pen and associated movements become more insular and more protective and more aggressive towards our neighbours. What do the panel think is going to change that attitude, or how do the panel see, say, the next 5 years developing if those sort of movements, political movements, continue to hold sway?
Interesting. I mean, as a devoted economist reader, yeah, I think we can all see it's fairly terrifying, isn't it? But
I'll chuck in a comment just for good measure anyway, since I don't have to worry about any hands view or any opinion. I actually think that rise to the right is actually an evidence of a failure of the left. That actually the move, the move in the vote and the dispossessed actually represent, by and large, people who are potentially ex-Labour voters or ex-Democratic voters. They're actually, what they're reacting to is a concern about globalisation, a concern about the move of what they perceived as their jobs. I'm in Scotland, so I know areas where there's just decimation and shopping and the occasional shopping centre, which used to be mining, steel, shipyards, etc. So those traditional opportunities have moved. And there's a siren call of the right that we're seeing, because it's quick and easy, and it's them, it's blaming others, and those people who cause it. But actually, a lack of the left, of a credible left political arrangement. I don't necessarily mean a far left, but actually a progressive left argument to actually put together a more cohesive argument that incorporates things like cooperativism and more democratic elements of business structure and creates actually real jobs, which are not just sort of Mac jobs which people will do. So actually my view would be that can be cut off, but it needs a re-engineering of the perception. The left currently sits there fairly concerned about what mainstream media says and reacting to short-term commentary.
And the 5-year outlook for that? Your prediction?
Mr. Corbyn might finally get his act together and actually put together a cohesive case.
Could I just add something from more, I guess a different point of view, more economic point of view? So there are a lot of strategists and economics saying that QE as well as led to populism rising in many countries, I guess. And this was because if you've been asset rich, you've really benefited from QE because you've seen your house prices go up, your stocks gone up, and your bond have gone up. But in fact, if you're more like middle class, there has been no inflation, so you haven't had a pay rise for a few years. So there is that feeling that inequalities have been rising and you've been missing out. And again, that leads to protest votes and the need of changing the system. So, and that's probably played a role as well.
I think the thing that worries me to your question is what happens in Europe, because you've got a chain of events now, and with the background of the populist vote in the UK and the US, but they're evident. The next president in Europe. So in December the 4th, we've got the Italian referendum on constitutional reform, and if the government loses, Renzi will step down as prime minister. You've got Beppe Grillo waiting in the wings with his Five-Star Movement, who's a very anti-EU campaigner. And then you've got French election in April, Dutch election I think in September, German election in October next year, all of which there's huge pressure for that sort of populist uprising to happen in all of those countries. And that's the big risk for me immediately now for markets. I think otherwise, I guess all we can do is be investors who try and find those companies that have some long-term growth trends that will ride through whatever the economic and political climate delivers us. Some of the businesses out there who are doing good for society or are helping consumers navigate. One area would be the companies that help you get more from less, as it were. The Costco's, the Ocados, that are sort of changing business models, disrupting technology that changes business models, that allows consumers to get the products they need cheaper. Some of those companies I think will win and continue to win, and that's where you would try and put your money.
Yeah, I'd certainly agree with that. And I think with all these trends that we see and maybe progressive things that we want to see happen, it never happens in a straight line. And I think what we're seeing now is, the idea of being progressive and cooperative hasn't been sold very well, if you like, to most people, as reflected in these results. So, people need to do a better job about convincing people. But I think that it'll be interesting to see, there's been a lot of chat, but with Trump, how much he will actually be able to change in terms of regulation. So just because you're voted in president, you want to do something. We've seen with Obama trying to do his Obamacare and stuff, just because the president wants to do something. It's all related to how the Republicans get in. It's not looking great, to be honest. But it's not the end of progression. It might be a little step back, but you're right. There's some long-term trends that will still come through this. But and I guess the thing to remember is that the classic one is renewables, and because of climate change, but we're seeing such massive improvements in cost reductions in a lot of these technologies that are happening, 15-20% per annum, that in 3 years' time, regardless of whether there is massive political will behind it or not, in many areas it will be the cheapest thing to install, will be solar, for example. So the need for these things to require so much subsidy, I hope, will be less and less over time. So stay optimistic that trend will still happen.
So, just thinking how much I paid for my solar panels and thinking what they would cost now. I did it about 10 years ago. Yes, anyway, there you go. Any other comments on that, or should we take one question from the floor?
No, I mean, I just echo the points on Europe as well. I think, what we saw in our area of the market immediately following Brexit was that everyone was clamouring for overseas earners, and yes, the dollar earners were very popular, but also European, and we have been scratching our heads a little bit in terms of the strength of European currency, and I think what happened last night and this morning makes us even more nervous about a few of the events coming up in Europe over the next 12 months, and I think clamouring for European exposure and overseas exposure is not without its risks at the moment. So.
Okay. Next question, anyone?
I have got another question, actually. Paul, you raised in the open table discussion about the fact that many fund managers out there still are not engaging with companies, global PLC, if you like.
Yeah.
And I wondered what, obviously, you guys are all doing it. I wondered what your thoughts are in terms of how do we actually go about persuading more of the industry to take a responsibility to actually move things in the right direction.
Yeah, it's a good question. I showed in the presentation earlier that there was a great piece in the FT a couple of months ago looking at how fund managers voted on pay. One of the bigger motive subjects we all have views on personally, and it showed that the biggest fund managers in the world actually voted in favour of pay awards in 95% of cases. There's only very few fund managers who are prepared to stand up and vote against the issue. So our industry doesn't cover itself in glory, frankly. And we need to do a lot more to shoot the question. How do we convince them? I don't know. We're doing as much as we can to try and convince people of the merits of speaking out. And I don't know to what extent people have a table here can comment, but particularly if you work for a fund manager and you're part of a very big bank, which has also got a very big investment bank, maybe got a very big wealth management channel, you sort of do have some conflicts of interest, really. Can you campaign vigorously on these things, or are you going to upset your guy from the investment bank who's trying to do a deal with that chief executive to do an M&A transaction? So the Chinese waterman banks probably have a lot to answer for in some of these areas, I think personally. So that's perhaps why the biggest banks don't sound that vocal on the issues. I think that's the honest truth.
I think conflicts of interest are a massive problem in that kind of area.
I personally think that clients asking for it is the way it happens. It's the way it happens with us. A lot of the movements that we've made have been the client said, we want to see all the companies in your portfolio, and that's what drives it. We want you to engage on this issue. And I think one of the issues, the trouble is that a lot of pensions stuff, although we work in it every day and we think it's amazingly interesting, for most people it's kind of dull life admin. And trying to get them to go and engage to some sort of abstract idea of fund manager so that they can engage with, I think, ultimately consumers need to work out that they've got a choice where they can put their money, and they're paying for a service from their fund manager, and they can demand things. And I think that until that happens, it's easy to see how things won't change.
Could I make a point on that? And I know you guys, I think perhaps there needs to be a bit more awareness, there needs to be a bit more publicity on this stuff from fund managers about what they are doing. I went to an event quite recently, I think it was Share Action, a group who do quite high profile stuff which clients can relate to. I think the problem is that sometimes it's kind of hidden away in kind of industry speak which clients don't really understand, and I think to have joint ventures where fund managers are working with people like Share Action or whatever, that is likely to have more impact. So I'd welcome more of that.
Just generally talking more about it. Sorry, no.
I think something else that does help encourage managers to engage is more financial evidence that that's actually beneficial.
Yes.
And so we've seen with, I think Calipers has published some information around the companies that they engage with performance. We've seen more research. We've done some research that looks at outperformance, and where we saw the biggest outperformance was, we called it a momentum strategy, but companies that don't necessarily have the highest ESG performance but are improving, and that's where you see the returns to investment as they become more efficient, they enter new segments, market segments, and that innovation that comes along with improving ESG leads to a better return. So it's an incentive for managers to help companies in their portfolio along that process because they will benefit. The challenge with that, though, is if you do start to look at an overall fund level assessment, the companies in your portfolio may not be the best companies, but that's because you're trying to help those companies to improve, and so you start having, and maybe the other fund managers can comment on that, but how do you manage that dialogue where, you know, you're saying, well, it's not a great company, but we're engaging with them to get them to be a great company so that we can all help improve performance.
And I think for everyone there's a different line on that. And, you know, do you want to be holding the shittiest company in the sector because it's going to improve the most? Maybe, you know, some people will do, and that's great. But, I think that there's a balance on that. And I do think that for some people, you know, the quality of the management, there is a threshold below which the risks to that business of something going wrong are higher than the positive momentum you're going to get. And that's for each fund manager to decide.
And I think it's a good point, Richard, that you raised, because it always strikes me as it's the best kept secret about, you know, the economic sustainable finance market is all the work that goes on. Because, you know, you and I will go and attend meetings and understand, you know, speak to managers and understand all the work goes on. But clients actually still present and still initially present on a negative basis. You know, what's your approach? You know, well, I want to avoid this. And if you're for a positive, then they'll probably tell you they want to invest in wave energy, in which you sigh, and then you sort of try and, you know, talk about economics with them. And it's getting down into that nitty-gritty. You have that patience to work with the client to, you know, to explain how markets work and dynamics and such like that, and about engagement. But then and I know we've shared emails on this, if you then sit down to try and put your quarterly, you know, letter out to clients to tell them the interesting things that are going on, then it can be quite challenging to, you know, to make a policy about accounting process look really quite sexy. So you're ending up looking for something that might be in the thought piece, which you're then trying to distill down into 500 words or less, with a pretty relevant picture, you know, for people to actually get it. But people actually do get it, and you know, it's the less obvious thing when it actually starts to explain to clients why they hold assets in portfolios as well. So, you know, there was the ECCR, CCLA work with Red and others over, you know, over labour standards. You put Premier into picture of why am I investing in that? You put into something about actually the engagement of work that's going on. Then people, oh, well, that's really quite interesting. That's, you know, my money's working involved in migrant labour and issues about labour standards in the UK. But it takes a little bit of work to dig those things out, which is why we as advisors are always very trying to give us stories and distill them into practical things that we can actually put out in client speak.
What question? Sorry.
Carol?
Do you want to carry on following that?
I'm just going to take you following on from that. It is those stories, and I'm trying to give information to my team of advisors. We can talk to with blue in the face about, you know, what policies are like, but it is, and you guys have a responsibility to get those stories out as to the difference that is being made by putting money into these. Because without that, looking at the bottom level of an advisor who's just trying to run his business by advising on funds, you're not going to get that traction. He needs to have those stories to tell that are really easy,
Bringing
really
to life.
engaging.
Yeah, absolutely. Absolutely. So on Fund EcoMarket, there's links. There's up to 5 links, URLs through to fund manager sites, and some of them are pretty good at that. We've put loads on, and there'll be links through to newsletter type chat and blogs.
Videos on your website, 5-minute interviews of 50-second interviews with fund managers and stories.
Yeah, that's why I thought tripod. It hasn't happened yet. Yes, okay. Action point for me there. Yeah. Would you like to?
So we talk a lot about engagement, and engagement's a sort of discussion, but all the engagement we talk about is from fund managers to the investee companies. What about engagement with protest groups, action groups, people like Greenpeace, Friends of the Earth, Human Rights Watch, those sort of organisations? And how do we feel about that?
We regularly engage with all of those, plus it's a very interesting dialogue. Sometimes the education can go both ways. There are times when an interest group really does know a lot more about the issues at stake, for example, what's going on in sustainable palm oil, etc. There are some of these entities that really know their stuff and can help inform us about it, and then there are other times when the education kind of goes the other way. But I think it's vital that we don't just spend our time in an ivory tower talking to board members and actually talk to some of the people who are looking at the broader aspects and highlighting the issues that we should be talking about.
Similarly, we had a very interesting conversation a few months ago with we run money for some of the big university endowment funds, and they got the students protesting at their door about the stocks in their portfolio. So we actually invited some of those Cambridge University students in to see us, and it was a really fascinating discussion because they actually got it. They understood the whole debate. It wasn't just pushing for investment. They understood that actually maybe it's better to be invested and to seek change rather than to sell the shares and move on. They got the entire debate, so we were quite impressed with their level of knowledge, understanding of the issues, and they weren't just coming in to beat us with a stick. They wanted to have a debate, understanding of the conversation.
Well, I'm always
If I can-
the more mature.
It was mature, with them.
But I'm talking
Yeah.
about more mature protesters to go back for maybe 40 years.
So if you
It's like Greenpeace, for
Yeah.
instance.
if you look at the Access to Medicines programme and the work that happened, say, 15 years or so ago with GSK and others, that was Oxfam driven.
But I have to say it's
Wasn't high
I
profile.
want to direct this properly because I don't want to waste this question. There is definitely antipathy between fund management groups and the protest groups. I talked to Greenpeace a couple of years ago about channeling information, and they laughed at me because the reaction they get from a lot of fund, maybe not from you guys, but from a lot of fund management groups is really quite negative.
Was that the Greenpeace business side, or was that? I mean, I've not talked to them recently, but they
Greenpeace
used to be
in London,
Greenpeace
in the
business
UK.
side that would do that.
But also in
differently-
Canada, with regard to mutual funds, it's the same kind of reaction, which is a shame, because I think that there ought to be more engagement. That's my personal view.
I think it's starting, it's early days, it's not happening as much as it should, but it is happening more today than it was 5-10 years ago. But I would agree that I think it seems quite concentrated within some of the leading fund management firms that are really considering these issues, who are